Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your business. He is the founder of the direct response marketing firm Market Domination LLC, and he is a 7-time best-selling author who has been interviewed on NBC, CBS, Forbes, Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity and real estate funds, discussing developments and trends shaping the industry. These experts will share with you how they've leveraged the power of equity funding to grow their businesses and increase profits, and how you can too. And now, here's your host, Cliff Locks.
Welcome to the Private Equity Profits Podcast. I'm Cliff Locks, your host. And with me today is Jeremy Britton, the Chief Financial Officer of Boston Trading. Jeremy has 25 years of experience in financial planning, entrepreneurship, and financial markets. Jeremy is a value investor who loves innovative technology, including building and managing cryptocurrency with his team. He started his first financial planning business at age 19 and went on to create 6 financial planning businesses and several retail businesses. An avid historian, Jeremy uses clues from the past to help predict the future. Jeremy and his clients exited the market several months before the 9/11/2001 market crash, and he's one of the only 4 people who predicted the great financial collapse 2 years before it occurred. Jeremy warned thousands of his readers in his 2006 book. He also predicted the 2020 market crash 6 months before COVID-19 pandemic broke. A stock analyst. Since 1992, Jeremy turned his skills to cryptocurrency in 2015 and uses similar methodologies to choose his next big play in crypto. Co-founded the world's first diversified crypto fund, which has outperformed the Bitcoin for over 3 years in a row. Jeremy has generously given away all his techniques for free and has sponsored over 200,000 children to have more entrepreneurial life. His goal is investor safety, managed risk, diversification across the spectrum of coins and technology stocks. He also created the Coin of Coins Mutual Fund. Jeremy is an award-winning best-selling author of several books on finance and business. Jeremy, thank you so much for being here today. I'm excited to have you on. Tell me about your background. Thanks. And how you got started and what led you to the specific career path.
That's an interesting story. Both of my parents were teachers. Mm-hmm. So I was educated obviously at home, and my parents practiced on me before they sent me to school. Grew up thinking that I could do anything. But at school, you're taught by employees. My parents were employees, and they instill this mindset that the only way to get ahead is by working more and more hours and longer hours. And when I started on that career path, I realized this is not really the way to get anywhere. Once I left home at the age of 18, I started to meet entrepreneurs, business owners, millionaires, and this sort of stuff. And I thought, this is the circle I want to run in. The guys who not only have the nice car and the nice yacht, but they've actually got time to spend on it. Whereas most of the people I'd surrounded myself with the first 18 years of my life were always working 60, 70 hour week. I wanted to mix in these circles, and financial planning was one of the intentions. And I was lucky enough to have a mentor who took me on at age 19, and he was a multi-millionaire. Taught me a lot of tricks. I made a lot of mistakes along the way. Realized that financial advice is one of those things that you can be in permanently. Like if I'm selling houses or I'm selling cars, once you've bought 3 houses or 3 cars, you've got enough and the relationship ends. But when you're looking after people's money, you can make them another couple of $1 million and they still want more and more. So you can actually have a lifetime relationship with a client, which is quite satisfying. Love capitalism. It's great.
I agree. The capitalism works globally. Hopefully don't move too far to the left at this point. Everyone faces challenges as they scale their career. Can you talk about some of the challenges you faced, overcame, and learned from to achieve success?
Yeah, well, again, I was clever at school, which made me think I could do anything. I did a year and a half of university, and I was clever at university, but you're surrounded by many, many clever people. Started chatting to this millionaire entrepreneur and started talking to him. And he said, hey, look, you can come and work for me. And I thought, yeah, I can do that, But book smarts and street smarts are very different. He didn't finish school. He started on the streets. Thinking I could run a business just because I was book smart was absolutely insane. So I started my first financial planning business at 19. Within 6 months, I was totally broke, broke. And I didn't have the street smarts. I moved back in with my folks. I waited tables and I learned from other people, totally different educations, a totally different mindset, being an employee as opposed to being an entrepreneur. And again, as an employee, you're taught to work more hours. You're not taught about leverage. You're not taught about delegation and things like that. So I had to learn very fast. I failed several times. So my first business, I was broke within 6 months. My second business, I lasted a year and a half before I was broke in that one. And this is when my parents were saying, you need to go back to university and you need to start again. Obviously, you're not cut out for business. And I looked at it and said, well, 6 months to a year and a half, that's a 300% increase. So obviously, the next time I start another business, if I just do that, then I can have this business for like 5 years. And then if it starts going badly, I can always sell it. I could start another business. I can do whatever I want. But having a coach and a mentor who actually had a different mindset to me was incredibly valuable.
I agree with you. Mentoring is very important. You figured out to work with some of the high net worth individuals, bring forth an opportunity plus the knowledge. And you're a great listener. I want to salute you that you look at history and you have the ability to predict the future. We have a habit of repeating what happened in the past. A lot of us, sometimes don't listen, or it's to our advisors, but they're wise, because they understand the historical patterns of this. They got their fingers on the pulse. What has drawn you to specialize in direct and mutual funds? What are the advantages to those investments?
I started out, I guess like most people, I started out with mutual funds because I didn't know enough. And I would read the reports from the fund managers and they were saying, we bought this and we sold this and we did that and we did that. And I would look for patterns. Like I guess a lot of kids who grew up sort of playing Tetris or any of these sort of Chinese checkers or those sort of games, you look for patterns and go, oh, there's a shortcut if I can just figure out what's going on. And after a while, you start to think there's some logic. Like Coca-Cola shares don't do very well in winter. They do very well in where everybody is drinking Coca-Cola, and Coca-Cola also owns a lot of bottled water companies as well. So you start to see the patterns. And after a while, you think, I reckon I could actually do as good or maybe better than the fund manager. Maybe I'll give it a go. I started to buy my own direct stocks and do my own research into those things. And again, learn by making mistakes. You make lots of mistakes. And I was only putting in, $500 at the time. So if I lost it, it wasn't crippling. And then I started to introduce to direct stocks and seeing how they could actually have what we call a core and satellite approach. So you stick 80% of their money into a managed fund where the fund manager is looking after it. He's liable if anything goes wrong. And then with the other 20%, you can afford to put into a few little speculative things that sometimes will lose. And it doesn't matter because it's only 1% of the portfolio, but sometimes will actually outperform and give you a high alpha return.
That leads me to my next question. Jeremy, as you consider cryptocurrency as a wise alternative investment, what are the current trends shaping cryptocurrency? Where do you see this headed?
Well, it's interesting. Like 2012 is when one of my friends got in. You're a financial planner. You should get into this. This is really stuff. And I'm like, nah, it looks like a scam. Dodgy to me. I don't know what it is. I don't understand it. It was only used by computer nerds. There was rumors about drug deals and things like that. And so I didn't take it seriously until a few years later when a few of my other financial mates were getting in and looking at this just based on scarcity. When I looked on in 2015 and we had staff sort of scattered around the world, we got people working for us who are in Fiji, in Africa, in India, in Indonesia. Paying these people would cost between 12 and 30% if you're using Western Union or traditional bank transfers and things like that. One time it cost me $79 to send $100 to one of our staff. And I looked at Bitcoin and thought, okay, I can actually email this money and it costs a fraction of a cent. So I bought like $500 worth of Bitcoin and then used it to pay our staff in other countries. And the funds transfer was incredibly cheap. I thought, this is great. I didn't see it as a store of value then. But then, I'd just buy another $500 worth of Bitcoin, another $500 worth of Bitcoin, and just keep it sitting there for when we need to pay our clients. And of course, when other people started to catch on that funds transfer was significantly cheap, started to use it as well, which bid the price up. And I famously bought $500 worth of Bitcoin. I paid someone $100. I paid out this. I ended up giving out $900 from the $500 I'd spent because Bitcoin was starting to increase in price.
Very good.
Okay, let's look at the rest of the market.
Very good.
And there's some really good projects because like to list on the NASDAQ or to list on the New York Stock Exchange or the Australian Stock Exchange, you've got to have at least $1 million just for listing fees and things like that. So there's a lot of projects who don't actually get to that stage. You think when Facebook was first founded or when Google was first founded, it was just a couple of guys in a garage. What crypto does is enable these people to actually start a project and basically sell stock in it without having to go through the process of listing on the stock exchange. I think it's a great opportunity for people to bring their ideas to the market. Mm-hmm. And we've got into some great little projects very early on when they were very cheap. The flip side of that is that anybody can list. Cointelegraph published in 2017 that 92% of the projects that came out in 2017 to 2018, 92% were scams.
Wow.
So it was just two guys in a garage who made up some rubbish, lied about it, and sold coins and then took the money and ran away. So you really needed to navigate and do the research to find out which projects are going to be around and which projects aren't. And again, there's the ability to seriously outperform. Some of our projects we got into early. They sat flat for a while, but then have returned 10,000%, 12,000%, 63,000%. But potentially very high return. And if you're one of the guys who first got into Facebook when Mark Zuckerberg was sitting in his dorm room, obviously you'd be a billionaire, but not very many people were invited to that meeting. That's where crypto gets the small projects. Yeah, huge potential, but you've just got to be very, very careful because it is a minefield.
So the due diligence is critical. So working with an expert like yourself makes it a lot easier to have a cleaner, smoother ride through the crypto community at this point, because there is a lot of coins out there, and that due diligence is key at this point. What do you see as the general trends shaping the markets now in the near future?
What I would like to see, or what's actually happening, probably.
Well, our listeners want to know what's forthcoming.
There is some talk about regulation at the moment. The SEC is battling with who's the other guys? Ripple and a few others.
Yeah, they are battling Ripple.
There's some discussion over whether a cryptocurrency is a currency or whether it's a security or whether it's a stock, how it should be taxed, that sort of stuff. Projects who disappear, sadly, but the regulations I think will protect investors coming in, and that's a good thing because there are a lot of scams. At the moment, there's over 10,000 coins available on the market. And I would hazard a guess that probably it's not as bad as 92%, it's not as bad as 3/4 of them could potentially disappear, go bankrupt, or take your money.
Zero value.
You know, the stock market is regulated. And, you know, if we have crashes in the stock market, like when September 11 happened, they closed the stock market for 4 days because people were panic selling. But the crypto market can't be stopped. So it trades 24/7. You know, it's on Christmas Day, Easter Sunday, whatever. It's running all the time. There's no regulations. There's no police in place. There's no roadblocks. So that's why we can get, 10,000% gains. If a stock went up by 300% in one day, the SEC would stomp on those guys. They'd stop trading. They'd investigate what's going on. But with the crypto market, there's these amazing risks and amazing opportunities. I would like to see some legislation come in that actually benefits the investors.
Excellent.
And if we can't regulate it because it's a worldwide market that cuts across borders, so the US can't pass laws that are actually honoured in China or in Latin America or something like that. But perhaps a lot of education. And that's what we've been doing for the last 5 or 6 years is giving away our intellectual property, giving away the education. So it actually limits the risk to the average investor.
That leads me to my next question. What are the current challenges facing the industry now, and how can our listeners overcome them?
Well, there's a lot of challenges. Obviously, investing wisely is number one. I was having a chat with a client yesterday who's multi-millionaire and saying, I want to get into crypto for the first time. And I said, well, be careful because it takes you a long time to make $1 million, whether you're doing it in investment property or whether you're waiting tables like I did. However you made your $1 million, it took you a while. But in the crypto market, it can take you about 10 seconds to lose it all. And there's a lot of stories about people who have lost hundreds of thousands of dollars just by buying into the wrong project or even transferring funds between their own wallet and they put in the wrong wallet address or they got scammed or whatever. So protecting your stuff is number one. And then looking to say, how can I outperform? What can I do here? relying on, I guess the education that we give, that we provide, which we've always done free of charge, or otherwise, deal with a fund manager. Now, we were the first one into the space with a diversified crypto fund. There's now 3 in the world that I know of that are fully diversified. One of them actually invests in only 7 coins, and one of them only invests in the top 20. They're more secure, but perhaps less outperformance. And obviously, you don't want to buy into just Bitcoin or just Ethereum. And this is why I disagree with the mono funds, like the Grayscale have just got a Bitcoin trust or an Ethereum trust or something like that, because there's a lot in the bottom line.
And so diversifying and understanding what your timeline is at this point for your expectations to be fulfilled. As an expert in the financial world, what would you suggest to our very and ultra high net worth individuals and family office listeners? What should they look for in a financial advisor and investing in private equity funds and alternative investments?
A bit of advice out there from some of the billionaires who have started to invest in crypto. And it's interesting, as I said before, it started off with the nerds. And then, just in the last sort of 12 or 18 months, billionaires invested in cryptocurrency, even entire countries investing in cryptocurrency. So when Tesla invests Bitcoin, when Michael sailed into Bitcoin, when you got El Salvador saying this is now our reserve currency for our country, that's like, they can't stop it now because it's a country's currency. It can't be stopped, it can't be banned, it can't be edited like the internet. But Bitcoin is a serious player in the market, and it has significant advantages over gold. And this is why governments are going to start to move towards Bitcoin rather than the gold standard, which we enjoyed for hundreds, if not thousands of years. So I think people have to take it seriously, for one, but also realize that it is unregulated, that it can be very risky. Not put all your money in there. You don't want to put your life savings in Bitcoin because it can drop. It dropped 60% at the start of the pandemic. Interestingly, our fund actually went up 60% when Bitcoin dropped 50% because we were diversified into other projects. And when money leaves a particular stock, when everyone sold out of airline stocks, when the pandemic happened, or when everyone sold out of Bitcoin, that money went somewhere.
Very good.
So again, diversification, putting your money in different places. Some of the billionaires have suggested, maybe 1% of your portfolio into cryptocurrency, maybe 5% as a hedge against inflation. Because obviously, in the last 18 months, we've been seeing central banks around the world printing trillions and trillions of dollars. It's not just in the US, they've been handing out stimulus checks, it's all around the world. It is devaluing the paper currency that's out there in the marketplace. So you want to invest into scarce commodities, probably avoid the bond market for a while. But again, don't put 100% of your money into crypto, maybe 1%, 5%, whatever you feel comfortable with, that can, literally drop 60% in one day and might go up several 100% the following week. But you've got to have a lot of safe diversification before you do that. Otherwise, nerves of steel would also come in handy.
Volatility. But sometimes it can be your friend.
Absolutely. Absolutely.
So
we've done very well out of the pandemic when everyone was selling stocks and things like that. So, and worrying about inflation. The official inflation figures is like 3%, and it's only temporary, it's only transitory. Well, they probably said the same thing in Zimbabwe. They probably said the same thing in Venezuela and Senegal and the Weimar Republic. When they started to see inflation of 100%, 200%, sometimes thousands of percent. So.
Well, let's use your crystal ball. What do you think inflation is now? Where do you think it's going?
Well, my view, and it's only my opinion, is that the basket which they base on inflation has been heavily edited in the last few years. So in the 1980s, the basket of goods that they based on included such things as rent or house payment. It included apples and oranges. It didn't include televisions. And so you actually looked at the cost, would buy food, would buy fuel, would spend money on rent. The basket of goods has been edited over time. When we started to buy the cheap TV sets and things from China, then the government said, okay, we're going to include the cost of TV sets and smartphones and things in the basket of goods. And we're going to take out healthcare and we're going to take out rent. Because obviously rent was going up, healthcare was going up, and the cost of cheap goods from China was going down. So the government could then say, inflation's very low, inflation's very low. But realistically, we haven't seen a wage increase for the average person since about 1994. Meanwhile, the CEOs are getting more money. I think 1970, The average CEO was getting paid 30 times what the average worker was.
Okay.
And that's okay because they got a lot more responsibility. But throughout the 80s and 90s, that wealth gap has switched 200, 300 times what the average worker has got. And there hasn't been a big increase in productivity. There hasn't been a big increase in GDP. So the wealth gap has gotten significantly worse. And the average person hasn't had their wage increases keeping up with real inflation. Real inflation is running about 13%, up to 15%.
Thank you for sharing.
On the goods that you actually buy. Because no one buys a TV every week. No one buys a phone every week. They're making rent and house payments every week. So, you know, the cost of fuel, the cost of oranges and bananas and things have significantly increased over the last few years and will continue to increase.
Very good.
Particularly with all this stimulus money that's being handed out, not just to people on the street, but to major corporations who are getting bailouts, and they should have gone bankrupt years ago.
Capitalism is being manipulated.
Absolutely. And this is why a lot of people want to go back to the gold standard, because when we had the gold standard after World War II, there was almost zero financial crises, you know, for around about 30 years. Since Nixon went off the gold standard and every other currency in the world has been floated, there is crazy financial crises, not just obviously the GFC, but in other countries. I mentioned Senegal before. There was 6 countries in Africa who had their currency devalued by the IMF to 50% of what it was. So you might have saved up $100,000 and saying, I'm going to move to the US, I'm going to have a better life. And then the IMF clicks its fingers and now your 100,000 is worth 50,000 in one day. So currency manipulation cannot happen if we've got a gold standard or if we've got a Bitcoin standard, because it's tied to a scarce commodity that cannot be printed at will.
Very, very important.
So I'm getting passionate about that.
We're learning. Thank you for sharing that. You've authored several best-selling books. What is it that made you want to share your ideas with the world by means of a book?
I think I'll also blame my parents for that, because both being school teachers, obviously education was very, very valuable and instilled in from a young age. And even growing up, I would see the people who were less educated had to work more menial jobs and work harder than those ones who had a degree or a diploma or something like that. But when I left home, I discovered the entrepreneurial education was actually out there for business owners. Like, you know, Richard Branson and Warren Buffett teach different things to their kids than what my mum and dad taught me. So education, I think, is one thing that can change your world. You know, all I've got to do is show a 4-step process to a kid in Kenya who's got a smartphone, and they can go and pick their own cryptocurrencies. They can go and pick their own stocks. Having that education, and this is why we sponsor kids in Africa, because you've got countries over there with 95% English literacy. They're very clever. They work very hard. But the country also suffers from 95% unemployment. So we're having these very skilled people growing up and going to university, but they've got no hope of getting a job because there's not enough businesses in the country. Teaching these kids to say, if you can get your hands on a smartphone, if you can access the internet, you can run a business. You can set your own hours, you can set your own income, and they can be dealing with the global market rather than their local market. Yeah, any sort of education that's going to give you entrepreneurial skills or investment skills will literally change your life and change the life of your children and your children's children.
It's a very good positive message, you know, very benevolent, very proud of you. What will be your personal legacy and what do you like about what you do?
It's a great question. I think I love to help people. And I've found a way to leverage that. Obviously, when I was financial planning, sitting at my desk, I'd talk to Mr. and Mrs. Smith who'd come in for an hour, and then I'd talk to Mr. and Mrs. Jones who'd come in for an hour. So in a week, I could only talk to maximum maybe 100 people. But by writing a book or writing a blog or sending a newsletter, I could communicate with thousands of people at once. And, you know, speaking on stages around the world and speaking to thousands of people at once and giving them some basic skills, and they can use that or they can go away and learn more if they wish to. I think the legacy is you lift one up, you lift all up. And there's a great thing about capitalism is, you know, if I go and buy a Ferrari, it's not impacting anybody else. It's actually benefiting the guy who sells the Ferrari, the people who make the Ferrari, you know, the manufacturers, the factories. It's spreading that wealth around. And then maybe one of my neighbors will see my Ferrari and go, oh, I think I'd like to have a Ferrari too. And then they spread the wealth around and putting it into the system where it actually works and circulates. You know, we don't want to just hoard all of our gold under the bed like Scrooge McDuck. But actually, one of my favorite quotes, I think it's from Warren Buffett. He said, money is like fertilizer. If you pile it up, it stinks. If you spread it around, it helps things grow. And I just love that. Just sharing the wealth, whether it's the knowledge, the wisdom, or the finances, can really help an entire community and the planet.
I think it's a perfect way to look at life is the idea of fertilizing. It's the entrepreneurial community. I mean, mentoring. In each podcast, I like to share with our listeners, we have a fiduciary responsibility to create paid internships, co-ops, and summer jobs that provide vibrant learning opportunities for our youth. I consistently hear from my colleagues, this is a wonderful recruiting tool. These programs provide an opportunity to hire unknown and mentor them into talented executives. The best leaders are great teachers. Please consider increasing the amount of women you invite to participate in your paid internships. Each of us make a positive contribution and change the lives of young people for the better. And personally, it feels good. Jeremy, thank you so much for spending the time with us and sharing your story. You certainly have positioned yourself as an expert in the field, and you have plenty to share that can benefit others. I'll share your company's web address, which is bostontrading.co. I'll spell it. That's BOSTONTRADING.co. Again, that's bostontrading.co. Jeremy, would you like to share your contact information with our listeners?
Well, people can contact us through the website.
Okay.
BostonTrading.co is where we have the Boston coin, the one that's a mutual fund with many coins inside of it. We also have our not-for-profit site, which is Trillionaire.com. So if you get the word crypto and millionaire and mix them together, you'll find Trillionaire.com is where we give away all the secrets and show what we're investing in and show how to choose your own investments. And people can even go there and get free cryptocurrency in some projects. So yeah, contact me through either of those or search for Trillionaire. You'll find a YouTube channel. We've got a lot of educational material and we do release content every 2 or 3 weeks.
I appreciate that. I want to thank you to our listeners. I look forward to being back with you shortly for another episode of the Private Equities Profits Podcast. This show has been produced by Market Domination, LLC.